Hey traders, welcome to Charts and hope everyone is doing great today as I slurp away at my caffeine. All right, so happy Tuesday, everybody. Good to see everyone. We have some interesting narratives at play, just sort of to kick off our show. First of all, I would imagine nobody's surprise, we have kind of a blazing PPI in terms of what we are looking at in terms of inflation. Look, I think that in terms of producer price index levels being where they are right now, and then having the CPI where it was. So these are all just inflation metrics, right? And again, we're going to go back to that March. Here we are, 99%. Gang, day after, well, what's Tuesday? So tomorrow, we are going to get that quarter point hike. There's just no question about that. That is what's discounted. So that would mean that it's very unlikely we're going to see, right, the hold, which really isn't a conversation at all. And we're very unlikely to see a half point hike. That would be a shock. The Federal Reserve knows what is discounted. They're not ignorant to this. But you'll see what the market is doing now with May. May is right back to sort of this neck and neck. This would be yet another quarter point hike. This would be a half point hike. So May, the May 4 meeting, may the force be with you, right? May 4th gets very interesting. So I'm looking forward to May for two reasons. One, what is that narrative going to be from the Federal Reserve? And two, and maybe more importantly, the Obi-Wan Kenobi series is going to be released on Disney Plus. So got to keep our priorities straight. All right, so what else do we have going on? Crude oil. What's going on with crude? So crude got hit with the narrative of the Iran negotiations that, based on all the geopolitics that are going on right now, that one fell so far in the back that as it kind of leaps forward into what we're dealing with at the moment. And what is with that weird red outline on my trading view charts? I have to fix that. So what we have going on right now is more weakness in crude. Now, all my cards on the table. I'm not going to put analysis out on things or talk about things that usually, unless you have a question about them, that I'm not in. I'm already in from crude up in this area, from that agro level. Now, that means we've only put in about 25% of our budget. That means we have limited exposure by way of how many USO calls we bought. And that still leaves 75% of the budget for this trade, for this candle. And yes, I will be looking for, I'm going to be looking for either two things today. Either setting up for a pause candle for tomorrow, or I might go ahead and put in a conservative entry based on that area right in there. So that's definitely something I'm going to be keeping an eye on. That would be the remainder of the position. And that's the plan, but I'll be executing the idea mostly in USO. Of course, micro crude is great. And from a conservative level, so is CL. I will seldom, if pretty much never, recommend from an agro level going with the full size contract, right? We don't want to do that. It would be either USO or the micro MCL. So do I think the market is generally speaking going to fade this narrative? Yes, I actually do. Now, is it going to take a day or two to get there? It might, but this is definitely something I'll be looking at going forward. All right, so that is what's going on as I take a look at the markets this morning. A little bit of, I won't even call it a relief rally, a little bit of a bounce in the S&P, a little bit of a bounce in the NAS, not before putting in lower lows. So this is hard to call this anything more than really just some pre-market noise. Let's see what we have after 10 a.m. Eastern. All right. So as always, this show is about your questions. So let's get into them. All right. Hey there, Peter. Does it make sense to buy a put today on the FXE before the Fed meeting? So I love the question, Peter. So there's always four factors that go into why a market's going to move the way it's going to move. Price is usually the very first. Then you can look at volume, volatility, and finally time. So this is a time-based entry, right? I would say that as high as we can get 6E or Euro US Forex or the FXE to go, or as high as we can see that go, at that point, I mean, there's a legit conversation about that. Or, Peter, rather than being pre-positioned, see, this would be pre-positioned today. I'd have to be really cautious about, anything like that, right? This kind of, where's my yellow? Is that yellow? Huh. All right, I'll figure that out. But I would be very cautious about pre-positioning, and I would be far more interested in getting a position a little bit closer to the wave, quite frankly, or even that Darvis level in there. So I like the short 100% or long puts, as you said. The risk is that if we do it before the meeting, if we do get that spike up, either you accept taking heat, really a little bit of unrealized loss on that move, or you fade the move. I like to have a little bit more proximity to the volatility event, to the hot zone itself. But I would say it would be aggro, but very likely valid. Not just because of the timing, Peter, but because of the trend. So really good stuff. All right, next up, let's see. Tim's asking, am I going to take a conservative 14 April 70 call today with USO? Tim, if I do, I'll alert it out. It's definitely on the radar, as I mentioned before. So if I do, I'll send it out, but it's definitely something I'm looking at. I want to see how the market responds, not so early in the session, but rather I'd like to see where crude ends up after 10 a.m., after the clearing, because when I look at, what it is that this market is mostly digesting, I would say it's mostly the Iran negotiations going well and then Iran supply hitting the market. I don't think that's going to be a longer term needle mover, but it's on the radar. It is absolutely on the radar. And same answer there, Jack. I love all the questions on USO. Yeah, this is still something I'm looking at bullishly, right? Bullishly, absolutely. So as far as how many calls, Christian, the how many is an answer that can only be, there's very few things that I'll say are something only you can do in terms of, well, actually, I won't say it's very few things. There are things that a trader must do. And the budget question is not so much how many contracts, although that is what we'll find out, is really how many dollars, not specific to crude, but how many dollars can I spend, I'm doing some one-handed typing here, can I spend per trade, not just crude oil's trade, but all trades, right? Because I believe in what they call a fixed bet approach. I have been doing that for many, many moons. For those of you that caught the webinar that we did, still a little bit less than a week ago here, one of the things I talked about was budget, right? That when I look at what we've done so far in 2022, how many dollars did I spend per trade? It was the same amount of dollars. Now, if all my triggers aren't met, then of course I can't deploy all the dollars that I want to deploy. But that's the plan, to have a fixed bet approach. So I'm not deluding myself into thinking that, well, this trade's really going to work and this trade may not. I'm using the same amount. So that's a budget question, Christian. That's definitely something that I think every trader has to determine based on primarily account size. All right. Okay, next up, any thoughts on metals? Sure. So copper's been on the radar And copper and gold have been on the radar. And copper's been a market that I'm very interested in building a position in. We pull back yesterday. Copper is going to move in many ways in sympathy with risk appetite, right? So risk appetite is oftentimes going to be what copper will move with. In other words, if equities are moving higher, that should help copper. Not always, but it should be a bullish influence if the indices are moving higher. Most of the time, however, I will use Freeport-McMoRan as a proxy. Now, I will tell you, we're going to take some heat on Freeport-McMoRan. That's all right, right? I think the thing that a lot of traders get really unglued sometimes is that once we're in, then we want the market to go back in our favor right away. Who doesn't? I want that too. But sometimes we get in, and of course, it might be an aggro, it might be a moderate level, but the overall zone could be far larger. So we have to think about how we can scale in, right? And how many dollars or percentage of our budget we use at each level, whether that be aggro, whether that be moderate, whether that be conservative. That is the approach that I use. That is the practice. That is the process. So ultimately, this is still in a zone that I like. I know why it's pulling back. It's tethered to copper. And sometimes along the journey of your trade, you're going to end up with slightly lower lows where you want to remain opportunistic as long as you are confirming why that is still a justified approach, why that strategy is still validated by structure. So little bit of weakness in copper that's going to affect my Freeport-McMoRan that we just set up yesterday. A little bit of movement, not a little bit, pretty decent movement in crude oil based on the Iran news. That's going to affect my crude oil. But again, it's all part of taking some heat. Now the question is, where else can we get opportunistic? Where else is the structure still valid? Are oil stocks pulling back, right? So in as far as your question on Alcoa, somebody asked me about Alcoa yesterday, and for the life of me, I can't remember why I said I was going to pass on it. I think it's spendy. Tom, I think it's a rather spendy corner of the market, which is why I passed on it. And VALE is just pulling back into our zone, right? VALE is touching the wave for the first time since February 24. So this is great. This is what I want to see for VALE. So if you're in the mastery and okay, Rag, we know where those volume ledges are. We know where those levels are that were part of the trade. We know what those triggers are, right? What are those price-based triggers which validate buying the options, right? Just wait for the triggers to get to you. And then, it may not look like a fun ride to the downside. But again, remember, heat is part of the game. But taking heat without validity, please hear me out. Taking heat, unrealized loss without validity of the trade is denial, right? It's delusion. Taking heat within the validity of the trade, validity of the structure, that's just part of the game, right? That's just part of the game. So always it comes back to structure, back to structure. That's why we have sort of the redundancy of structure tools, 4 of them, just to, always kind of, what's that scene from Moonstruck? Snap out of it. So we don't just sort of get stuck in the narrative that's happening on television. We have grab candles. We have the wave. We have the JT multi or the JT, knock the camera here, or the JT trend, right? We have all these things that 4 different tools. Most of you will probably use the JT multi or the JT trend trade flags, either way. But we've got the redundancy to constantly remind us what is always the most important: structure. By the way, grab candles, wave, those are available free over at countdowntrader.com. So I'm not telling you to measure the market with something that you can't go get, right after the show if you'd like. And then if you're in the Sector Secrets Mastery, the options room, the futures room, the day trading room, or heck, even the training room, I am pretty sure Lorna Bot has put the layout that I've shared with the entire simpler community to help you prioritize structure. These indicators play very well with everything else you might have. Everything you use, every indicator, structure comes first. So the best way that I know and the way that I've been doing it the longest, right, is with these tools. Green grab candles, support at the wave, green momentum, green trend. It's definitely still something I'm looking to look to the long side on. So I hope that helps. Thanks for the question, Tom. All right, next up. Hey there, John. Big fan of the gold room. Very cool. What would I start dipping my toes into? GLD? Sure. Let's go take a look. Yeah, I believe I would. This is the GC futures. This is what I would look at, and this maps to MGC, GLD, maybe even XME, GDX, GDXJ, all those stocks that would be tethered to the gold narrative. So yes, I will start looking at the thing that when I say start, and why am I not saying, yes, we're going to buy it? The size of the candle matters in terms of something that we use quite a bit, right? Historical volatility, right? We use that a lot, historical volatility. That means that the number of points that we're moving in a candle can be measured against what's sort of normal. So we're not arbitrarily sort of looking at a candle and saying the fish was this big, right? That's what a lot of traders end up doing, a very subjective approach to what a big candle is. We do that against historical volatility. So if this is a large candle, and based on the range, we know that it is, especially if you look at historical volatility, let me at least give you all a view of what I'm talking about. Because I know some of you may not know, Rag, what are you talking about and how do you measure that? So historical volatility is basically, in the case of gold, about 32 points, right? 32 points. If I've got a range high of 56, 57, and a low of 17, what do we know? We're exceeding that historical volatility, not by a lot, but we are exceeding that volatility. We have right now 32 points, but as far as historical volatility upper end, but right now, and the day is young, it's only 9:17 a.m. Eastern, we already have 40 points. This is a quote unquote large candle, right? So this is where sometimes it makes sense to look for a pause candle. Now, could you buy into that? Yes, this is your range, right? That's your range. You could look to pause, or you could look to engage the market in that range. I don't know if there's a right or wrong answer. It's not right or wrong. It's not good or bad. Is it, you want to get aggro, or do you want to be a little bit more conservative? That's really it, right? Do you want to be aggressive, or be a little bit more conservative? Maybe you're looking at this volume ledge down here and you're saying, wait a minute, I'd love to see something a little bit lower. That would be a great conservative zone. And that might be our conservative zone going forward. But where we are right now is aggro, but valid. It's definitely aggro, but valid. So let's try that again. Here we go. Really, the top half of the wave could be considered aggro, but valid. Not because where it's sitting is aggro, but the way that it got there is aggro. Okay. All right. Next up is, all right, a lot of questions on crude. I think we addressed most of that on the very onset of our chat. So again, I'm not skipping your question. I hopefully everyone had that question about why crude is moving lower, what I'm planning to do. We spent a good 5-6 minutes on that. All right. So next up is when I buy the dip or sell the rip, it looks like I never wait for confirmation. So a candle in the direction you want. So, confirmation, I think I do wait for confirmation, right? So what kind of confirmation are we looking for? So arriving in my zone is confirmation, right? Just as we know, if I'm a batter, when the pitch goes over the plate at the spot that I know that I have a high probability of connecting, that's my confirmation. Now, some traders want different confirmation. They want to see that not only the market has gotten to that level, but then it's responded, right? So it's just a different kind of confirmation. So arriving in my zone to the question, is confirmation enough? I do not need to see the momentum kick back in. So some traders like that. I think if you're an exhaustion trader, you're going to resonate with what I do. If you're a momentum trader, you're going to want that different type of confirmation, which is, all right, we got a low and now we're getting a move in the other direction. And that's fine. Either way is fine. It's really a matter of what you are comfortable with. All right, we're going to wrap this up with EWZ. So a lot of our entries are pushing more into conservative levels. So my folks in the mastery, we know we have our zones really covered. So we have usually 3 different levels that we're looking at, and we're going to see that in a lot of these, because what do we have exposure to? We have exposure to the commodity narrative, right? And I'll definitely be following up on this. But look, give the market till about 10 a.m. Eastern before you think, oh my gosh, what's happening with these trades? Remember, they're all moving together. That's okay. Heat is part of the game. And so that commodity narrative is definitely getting hit today. Sometimes it's the weakness that gives us the opportunity. Again, that pitch across the plate, right? And if not, you know already what your percentage risk is. Okay. So give it till about 10 a.m. and then we'll go from there. And I'll be in the mastery room a little bit later on. I'll get those notes out to you all. I'm sure we'll discuss a lot of these trades in those notes. So what do I like? Brazil is still a buy to me, right? Structure dictates strategy. Sure don't want to short this thing. So I'm going to give this thing a little time to settle back down after a lot of weakness, and we'll see what happens next, right? All right, gang. As always, thanks for being here for Charts and Commodities. Charts and coffee. I got commodities on the brain. I will see you all tomorrow. Be good to each other.